Your home insurance premium went up at renewal. You didn't file a claim. Nothing changed on the property. And the notice arrived with a higher number and no real explanation. I've spent nearly a decade working inside the Canadian insurance industry. In this video, I'm going to explain why home insurance premiums increase at renewal even when nothing has changed on your end, and the specific steps to take when that happens. First, understand that the increase may be partly, or sometimes entirely, unrelated to anything you personally did. Home insurance pricing is driven by two separate factors. The first is your individual risk profile, your claims history, your property condition, your coverage choices. The second is the insurer's portfolio, the level experience. What has happened across all of the policies they hold, not just yours. In some regions, insurers may adjust home insurance rates upward after higher than expected water damage, weather losses, or construction cost pressures. Homeowners who have never filed a claim can still see increases if their area or property type is part of a segment the insurer has repriced. The insurer is not targeting them individually. They are repricing a segment, and individual policyholders in that segment receive the increase regardless of their personal history. This is one of the most frustrating aspects of home insurance from the homeowner's perspective. You did everything right, your premium still went up, and the renewal notice does not explain why. Second, do not accept the increase without asking three specific questions. Question 1. What specifically drove the increase? Ask your broker to get a breakdown. Is the increase driven by a change in your dwelling replacement cost estimate, a change in your risk tier, a general rate adjustment across the insurer's book? Each of these has a different response. If the increase is driven by a change in your dwelling replacement cost estimate, ask your broker whether the estimate reflects the actual rebuild cost for your specific property or a regional index figure. In some cases, a more accurate rebuild estimate may confirm whether the number is reasonable, but do not simply lower the dwelling limit to reduce the premium. If the replacement cost is too low, you may be underinsured after a major loss. Question 2. How many insurers did you quote this renewal? A premium increase from your existing insurer does not mean every insurer in the market is pricing your property the same way. A broker with access to a panel of insurers may be able to find a comparable or better rate at a competing insurer. If your broker cannot tell you how many insurers they quoted, the renewal may not have been shopped. A broker who genuinely shops your renewal contacts multiple insurers and compares quotes before presenting options. A broker who auto-renews without approaching the market is not shopping it. The rate gap between your existing insurer and a competing insurer for the same property can be several $100s per year. That gap does not close by itself. Question 3. Has anything changed in my policy that I should know about? Premium increases are sometimes accompanied by changes in coverage terms, exclusions, or deductibles that are not prominently highlighted in the renewal notice. Read the full notice, not just the premium line. Third, know when to stay and when to switch. Staying with your current insurer is not always the wrong choice after a premium increase. If the increase is small, if your claims history with this insurer gives you a meaningful claims-free discount, or if the policy includes coverage terms you value, the stability may be worth the higher rate. Switching is worth considering when the premium increase is significant, when your broker can confirm a materially better rate from a competing insurer for comparable coverage, and when your broker or insurer cannot give you enough detail to understand the increase. If you do switch, be aware of two things. First, your new insurer may conduct a property inspection after the policy starts. Second, switching mid-term may trigger a short rate calculation or cancellation cost, depending on the insurer and policy terms. The right time to evaluate staying or switching is before the renewal date, ideally 2 to 3 weeks before. If you wait until after the renewal has processed and paid, the financial case for switching is weaker. Fourth, know what not to do after a premium increase. Do not reduce coverage just to make the premium smaller without understanding what protection you are giving up. A lower premium is not a win if it leaves you underinsured after a major loss. Do not raise your deductible unless you know you could actually afford that deductible during a claim. Do not cancel your current policy until replacement coverage is confirmed in writing. A lapse in home insurance can create problems with your mortgage lender and may make future coverage harder to arrange. And do not compare quotes by premium alone. Compare the dwelling limit, deductible, water coverage, sewer backup, exclusions, and endorsements. A cheaper quote with weaker coverage is not automatically a better deal. Fifth, address the fixable factors. Some premium increases are driven by factors that are within your control. If your dwelling replacement cost estimate has increased significantly, ask your broker whether the estimate reflects the actual cost to rebuild your specific property or whether it is based on a general regional index. If you have not claimed any discounts available to you, monitored alarm, claims-free, bundle discount for holding home and auto with the same insurer, ask whether any of these apply and are currently reflected in your policy. If you have a monitored home security system and your insurer is not applying a discount for it, the documentation required is typically a certificate from your monitoring provider. If the increase is tied to a risk factor on your property, an aging roof, original plumbing, or an undisclosed outbuilding, addressing that factor before the next renewal may reduce the increase at the following year. Here is the reframe. A premium increase at renewal is not something that simply happens to you. It is a starting point for a conversation. The homeowners who make better renewal decisions are not the ones who accept the first number without questions. They are the ones who ask what drove it, whether the policy was shopped, and whether anything on their end can be adjusted. What to do in the next 7 days if your premium jumped at renewal? Ask your broker what drove the increase. Ask how many insurers were quoted. Read the full notice for coverage changes. Check whether any discounts are missing. Decide whether to stay or switch before the renewal date. The free homeowner checklist is in the description. It covers the renewal questions worth asking before every policy decision. If you found this useful, subscribe. I publish regular Canadian insurance breakdowns for homeowners. Everything I cover comes from nearly a decade working inside the Canadian insurance industry. See you next week.